friends, welcome back to the channel. I am Iggy here, and I've been covering topics such as stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers with over 800,000 reads. I've covered over 600 videos and over 280,000 watch hours as of November 2024. In this video, I am going to share with you 4 Singapore stocks that can pay you dividends for life. Let's get into it. Haw Par Corporation, the tiger that keeps giving. Let me share something exciting about Haw Par Corporation, a true Singapore success story that's been around since 1969. Most people know them for Tiger Balm, that iconic red ointment that's become a household name across 100 countries worldwide. But Haw Par is much more than just Tiger Balm. They're a diversified powerhouse with 4 major divisions: healthcare, leisure, property, and investments. Their healthcare division, which includes the Tiger Balm brand, has been their golden goose, consistently delivering strong revenue growth even during economic downturns. What really sets them apart is their incredible financial discipline and shareholder-friendly approach. They maintain a rock-solid balance sheet with 0 debt and over $800 million in cash and investments as of 2024. When we look at their dividend track record, it's nothing short of impressive. They started with a modest 20 cents per share from 2010 to 2017, then increased it to 30 cents through 2022, and now they're paying a generous 40 cents in 2023. But here's what makes them extra special. They love surprising shareholders with special dividends. Remember that amazing 0.85 special dividend they gave out in 2018 for their 50th anniversary? Their latest financial results are equally encouraging, with profits jumping 17% in the first half of 2024. Their healthcare segment saw a 6.3% revenue increase, hitting $118.1 million, while their investment portfolio generated a healthy $79.1 million in dividend income. With their strong market position in Asia and growing global presence, Haw Par shows no signs of slowing down their dividend payments anytime soon. OCBC, the banking powerhouse. OCBC, Singapore's second largest bank, stands as a testament to financial resilience and shareholder rewards. With a market capitalization of over $66 billion and a network spanning 18 countries, OCBC has proven its mettle through multiple economic cycles. The bank's commitment to shareholders shines through its dividend history. During the 2008 financial crisis, they maintained a payout of 28 cents, and even through COVID-19, they kept dividends flowing at 31.8 cents. This reliability stems from their diversified revenue streams across traditional banking, wealth management through Bank of Singapore, and insurance through Great Eastern Holdings. Their recent acquisition of Citigroup's consumer banking portfolios in Malaysia, Indonesia, Vietnam, and Taiwan for $5 billion demonstrates their ambitious growth strategy in Southeast Asia. The recent high interest rates have been great for OCBC. Their profits hit new records. It's $5.9 billion in just 9 months of 2024. They've been raising their dividends too. From 53 cents in 2021, they went up to 68 cents in 2022, and then 82 cents in 2023. The current high interest rate environment has supercharged OCBC's performance, with their net interest margin expanding to 2.25% in Q3 2024. Their profits have soared to unprecedented levels, hitting $5.9 billion in just 9 months of 2024, a remarkable 35% increase from the previous year. This robust performance has translated into generous shareholder returns. Dividend payouts have grown from 53 cents in 2021 to 68 cents in 2022, and further to 82 cents in 2023. The bank's strong capital position, with a CET1 ratio of 14.8%, suggests they have ample room to maintain or even increase these dividend levels. Their non-performing loan ratio remains healthy at 1.1%, while their digital transformation initiatives, including their partnership with Google Cloud, positions them well for future growth. Looking at their wealth management segment, they have grown their assets under management to $255 billion, providing a stable fee income stream that complements their traditional banking operations. SGX, the money-making exchange. Let me break down why SGX is such a powerhouse in the dividend space. As Singapore's only stock exchange operator, they basically have a monopoly on stock trading in our country. Think about it. Every time someone trades shares, SGX takes a cut. Every IPO listing, every derivatives contract, every market data subscription, it all adds up to a steady stream of income. Their dividend story is impressive, starting from 26 cents back in 2009 and now reaching 34.5 cents in 2024. What's even better is their consistent performance. They've managed to pay dividends without fail since 2003, even during major market downturns like the 2008 financial crisis and the COVID-19 pandemic. In their latest financial year, they reported a solid revenue of $1.2 billion, showing just how resilient their business model is. But here's where it gets really interesting for dividend hunters. SGX isn't just sitting on their laurels, they're actively expanding into new areas like FX derivatives and ESG products. They've made strategic moves into the Chinese market through partnerships with the Shenzhen Stock Exchange and acquired companies like Max Trader and Climate Impact X. Their commitment to growing dividends by mid-single digits annually isn't just talk. It's backed by their plan to boost revenue by 68% yearly. With a market capitalization of over $11 billion and a dividend yield that consistently hovers around 3.25%, SGX offers that sweet spot of growth and income. The best part? Their operating margins are typically above 50%, which means they have plenty of room to maintain and even increase those dividend payments. For income investors looking for a stable cornerstone in their portfolio, SGX's combination of monopolistic position, strong cash flows, and clear growth strategy makes it a compelling choice. That's the kind of steady growth we love to see. Boustead Singapore, the engineering giant. Let's talk about Boustead Singapore, our final dividend powerhouse. Think of them as Singapore's corporate Swiss Army knife. They've got their fingers in everything, from energy engineering to real estate and healthcare. What I really love about Boustead is their consistent dividend track record. They're currently offering a juicy 5.3% dividend yield, which is way above the industry average. The company just announced their latest dividend of 1.5 cents per share, payable this December. While some might worry about their dividend history showing some fluctuations over the past decade, I'm actually impressed by how they've managed to maintain payments even during tough times. Here's what gets me excited about Bousted's future prospects. Their earnings per share have been growing at an impressive 20% annually over the last 5 years. That's some serious momentum. Sure, their revenue took a slight dip recently, but don't let that fool you. Their profit margins are actually improving, with a 34% jump in net profit for the first half of 2025. With their order backlog sitting at a healthy $157 million and an additional $149 million in deferred services for their geospatial division, they've got a solid pipeline of future business. Plus, they've already secured $96 million in new engineering contracts since the start of their fiscal year. What I particularly like is their balanced approach. They're not just throwing all their cash at dividends, but are reinvesting in growth while still rewarding shareholders. That's exactly the kind of long-term thinking we want to see in a dividend stock. Why these stocks matter. These companies share 3 important traits. First, they have strong business models that generate steady cash flow. Second, they have a long history of paying dividends. Third, they keep growing their dividends over time. Remember, dividend investing is like planting a money tree. You want companies that will keep paying you year after year. These 4 stocks have proven they can do just that. If you enjoyed this video about dividend stocks, you're going to love my analysis of DBS versus OCBC versus UOB. Which SG bank is your best investment bet? In that video, I dive deep into comparing Singapore's 3 biggest banks and help you decide which one deserves a spot in your portfolio. Since we just talked about OCBC's impressive dividend track record, you'll definitely want to see how it stacks up against its competitors. Click the link above to watch it now.